Hello, good evening, everyone. I'm Gerald. Welcome to this week's Traders Club. So this is a weekly session for ChartNexus members looking at the STI SGX Singapore stocks. Yeah. So today, 9th of June, right, Tuesday. So market is closed. Latest data is already downloaded. Market has been pretty bullish. So I think today what I'll do is I'll do slightly differently. And because a lot of stocks have basically run up, yeah, so some may have missed it. I also missed a couple of stocks because the trading opportunity wasn't there. Okay, but what I'll show you today would be how do you wait for them. Okay, definitely you try to buy now. Of course, it could go higher, but you could be buying too far from support. Okay, so I'll try to highlight some of those stocks that have those support levels, and I think even better would be multiple support levels. Yeah, so at least you can know where to wait for them. All right. Okay, before I go into those stocks, right? So let's take a look at STI first. Okay, just a quick recap. Okay, so what has been going on after the previous discussion? Okay, so STI, yeah, you see this gap support. So this is one support that we talked about previously. Later, I'm going to talk. Those two stocks that I share will have this similar characteristic as well. Yeah, which is a gap support. So what's a gap support? It's basically a previous gap up, right? So there was a gap up in price, and subsequent times when the price tests it again, this gap would be attracting buying activity. Yeah, and if the buying activity is sufficient, that's where the support will hold on. Okay, so in this instance, right, STI created this gap was created in early April. As you can see, it tested a few times in mid-April, and then it tested again in towards the end of May. Right, so this is a gap support. Right, gap up becomes support. So you held on. There's a rally rebound upwards. Okay, now do you remember at that time when we talk about rebound, right? So as the price goes higher, watch out for resistances. So gap up is a support. Okay, but if it gaps down, so this is in mid of March. So there's this gap down. So gap down basically means the next time it visits, it becomes a potential resistance. So as you can see here, last week, right, at the beginning of June, as the price was going higher, we are saying be mindful of this resistance. Okay, so indeed it tested on the 4th of June. Then the next day on the 5th of June, it tried again. Okay, so it was basically attracting sellers. Okay, but if the sellers are not sufficient, right, the market continues to be bullish and buyers able to push the price higher, this is where we can see the gap being closed. Okay, so the good news is this gap is no longer valid. Okay, so this gap resistance is covered. So this is what we meant by covered, or the gap has been filled. So if it's filled already, means it's no longer a valid resistance. Okay, so that's the good news. Okay, the bad news is, yeah, so after it's gone higher, the bad news is there's another gap. This was in early March. Yeah, so it's a bigger gap. Okay, so this is something that we want to be mindful of. So that's why I say we are now nearer to a resistance. So if you buy, right, you buy here, even if the price were to go up, you'll be challenging a price level where sellers may return again. Yeah, so this is where be mindful of this gap resistance. Okay, so then what do you do now? So like I said, a lot of stocks are pretty similar in that manner. Yeah, so do not chase those stocks. What I want to do with today's session is try and highlight to you which are the levels that you would want to wait for. Okay, all right, so I'll just start with the banks first, right? So start with the three banks, UOB, DBS, OCBC. Right, so this is UOB. All right, so as you can see over here, if I zoom it in, all right, so you look at this candle today. Okay, what it basically does today is that it covers the entire gap. So that's the good news. And you see, this was the gap that was created in mid-March. Yeah, that causes STI to gap down as well. I think it's a day where a lot of the blue chip stocks were gapping down. Okay, but in any case, this is a gap. Okay, not all stocks have covered the gap. Okay, but for UOB, you can see today, right? Although there's a sell down because it's a gap resistant, but the good news is this gap is considered closed. It's filled up already, so there's no more gap. All right, so of course it'll be very tempting to look to buy. All right, but as I said, we are too far from support. Okay, so where are the support level? Okay, so there are a few supports. All right, so the first one, let's look at the horizontal support. Okay, so horizontal support. Okay, what I mean by horizontal support is, do you see that $20.97? This was the last time the price tried to go past, right, after the sell down. It tried to rebound. It couldn't go further and it starts to pull back. And it was never able to trade towards the $21 until the breakout here. Okay, so resistance that is broken. The next time, if you to come back again, right? If the price were to ever visit this resistance, resistance broken, it may become a potential support, right? So 2097 or thereabout, it is a potential support. So if the price were to pull back, that is one support to look at. Now, the price may come down very quickly, or it may take days for it to come back down. Of course, it may not even come down, then there's nothing to look at. But if it does come down and pull back to the previous resistance broken and turn support, okay, another likelihood is the moving average. Okay, look at the 20 and 50 days moving average. All right, what may happen is the 20 and 50 days moving average may start to catch up, right? So as a result, you may see something like that. All right, so if that happens, can you see this whole area here? Not only is a support for the moving average, right? Remember, between the 20 and 50 MA, that's the support zone, all right? And if the price was to pull back at around this $20.97, it becomes a confluence of support. Yeah, it becomes a confluence of support level. All right, now if you were to go lower, there's in fact another support. So let me erase this. Now, can you see that in fact, if the price were to pull back heavily, strongly, you can see there's a gap over here. Yeah, so in the event, right, the price pull back fairly quickly, can you see the 20 MA will be coming up, 50 MA will be coming up, and the price will be coming down here. It is a confluence of support again. So you have your gap support and the 20 and 50 MA support. All right, so this is what we meant by stalking and waiting, or buying on pullback. Yeah, you got to be patient and look out for the best opportunity. Okay, so this is what you can do with UOB. Now, as the strategy say, you buy on the pullback. If the price did not pull back and it's a very strong rally, this is where you would miss it. All right, but think about it. If you say, oh, I don't want to miss this rally, and you start buying, then you ask yourself, are you prepared that the risk of it coming down? Right? And in fact, the risk of it coming down looks a bit higher because you are further from support level. Remember, the market always try and buy near support. Okay, so this UOB, I'll show more, right? So there are several examples that you can make use of, because these are how the market is presenting them to us right now. Okay, now, so this OCBC, the OCBC is another of the blue chip stock that had a gap down here, isn't it? And the good news is it had been closed already. So completely closed today. Yesterday, there was still a little bit of not closed yet. Can you see yesterday, right? Yesterday, there's still a little bit, but today's candle entirely closed it. Of course, today the market didn't go up further. It closed lower than the opening, but it has closed the gap. Yeah, that's why the sell down today. All right, but the key thing here is look out for the potential when it pulls back. All right, so what is the potential? Where's the potential support? Okay, so first you can look at the horizontal support. Yeah, so after the sell down here in March, you see that the price have never been able to go past the $8 and around $8.90, $8.86. Yeah, so this is what we call a resistance until it finally break up beginning of June. Okay, so this horizontal resistance now become a potential support. Yeah, so this level now becomes a potential support. Sorry, it should be here. All right, it becomes a potential support. So which means, right, if the price were to pull back subsequently, all right, so this level becomes a potential support. Now, of course, it may pull back sharply back to this and test the $8.86. and at the time the 20 and 50 MA will be also around that region. Okay, but sometimes it may not pull back so sharply to reach back to $8.86. Okay, so if that happens, right? So if it pulls back not so far, the price may be just pulling back only here, and it may just bounce off, right? So that's where there's another level that you can look at, right? Which is here, right? So this is a small gap here, all right? You see between this day, right, and this day, yeah, from last week and this week, there's a small gap up. Okay, so this is one potential gap support as well. Okay, but if you feel that it's confusing and don't know where to look for, right? Enlarge it, you can see, all right? But I think the key thing is you use the 20 and 50 MA as the guide as well. So by then, your 20 and 50 MA, right, would be extrapolating. Yeah, so it could be coming up and the price come down to the support. Okay, so when you revisit all this support, of course the support may break. Yeah, so that's where when it comes back to all this support, we start to look up for our MACD signal, maybe, yeah, 4 red, 1 green. Because when the price come down, all your MACD will become red, and then when it reaches this 20 and 50 MA support, and if it's able to bounce up, your green will appear after the series of red. Okay, so DBS, UOB, OCBC. Let me show DBS now. Okay, so DBS closed all the previous gaps already. Yeah, so there was a gap. Same thing, it was closed entirely. So it's more bullish. Yeah, you can see the magnitude of the rally. Okay, so since it has risen sharper, so the support level may be slightly further. Right, so this is where you can see there's this gap. All right, so you have a gap support. It's a gap up. So the next time it comes down, it becomes potential resistance. So if it comes down, right, and visit around this 2040 region, right, 2020 to 2040, not only it will be testing this gap as a support, it also tests the 20 and 50 MA as a potential support. All right, so these are things that are exciting to look at, right, as the market tries to extend on its bullish sentiment. Yeah, so less likely you just go up one straight line, you see some form of a pullback. Okay, another likelihood that scenario you may see is the 20 MA continue to move, but the price didn't pull back too much. Yeah, so in that case, this gap, you may wait here and nothing happens, right? Because the price didn't pull back as much. Okay, so always still use the 20 and 50 MA because the price could pull back here, and then you're at the zone between the 20 and 50 MA. Right, so that's something that you could anticipate for. Okay, it's not a prediction, but at least when the price starts to behave in certain manner like this, you know what to do. Okay, right. So these are the banks. I think the banks are definitely leading the run. The first sector that was recovering, or just say the first sector that was not affected much by COVID was the electronic, because they are the one that moved up very sharply. Now followed by banks and of course by the property stocks. Right, so let's look at the property stock now. CapitaLand. Yeah, I know a lot of you are in CapitaLand because previously we talked about the double bottom. Yeah, if you look at the past video, there's this double bottom during end of March. So when it broke out in April, yeah, I know some of you went in because that's where we got it from your messages. Okay, you went in, but after it came down, but of course it didn't hit the 2x ATR stop loss, and then it started to go sideways. So for those who had held on, right, so you're now in profit, and you're supposed to hold on because it didn't hit your stop loss yet. Okay, but yeah, so the breakout was based on the around this $3 mark. So, but now because it's tested again, so I will just be a bit more precise. 305 become the resistance. Okay, so around 304, 305. And see, it was never able to break past. Okay, until only on the 2nd of June. Beginning of June, it found this candle, right? Beginning of June, this candle finally breaks past 305 resistance. Okay, now it's up here. Potentially it could go higher, okay, but you can't be guessing. So I'll prefer that you wait for the pullback. So where's the pullback? So you can see the 20 MA now. Yeah, so the 20 MA starts to move up as the price try to pull pull back towards the 305. Resistance broken, turn support. Okay, resistance broken, turn support. So there is a potential, all right, for capital length. Okay, so right now you can't be buying because you're not near support at all. Okay, that's very important. Okay, another property stock you can look at is CityDev. Okay, CityDev. All right, so CityDev at that time was stuck at around $8. Yeah, if you remember. Okay, so around here, $8. So at 808, I mean it's an $8 stock. So it's some buffer. So it's around 808, 810. It couldn't break past, except on the beginning of June, it finally broke past. So same thing with for the pullback. All right, but there's something I think we need to talk about for CityDev. All right. Okay, so by the time it pulls back to 808, right, the 20-50 MA could be like that. So this place become a confluence of support level. Yeah, confluence means it's not only one support level, it's multiple support level. So which means anybody who is just trading on resistance, broken, turn support, they'll be watching this level. Anyone who is using the moving average as support, they will be watching this level. So multiple groups of people trying to look for the buying opportunity at that price. So you get a confluence of support. Okay, now, but one thing that you need to know of, remember just now I was saying in the beginning of March, a lot of blue chip stocks were gapping down. So you saw the banks, the gaps were all closed. Okay, the only problem with CityDev is, you see this same thing, it has a gap, all right? And guess what? The gap is not closed yet. So this is the only thing that you need to take care of. Yeah, so this is how you eliminate different opportunity. Yeah, so it doesn't mean you have a stock, you start buying it, you start to discard some that you feel that it may not be as ideal, right? Because of the overhanging resistance that's not closed yet. Yeah, I do a comparison. You look at DBS. So DBS, there was this gap. Yeah, in fact the three banks, they had all the gaps. You can see the gap was closed. Oops, the gap was closed. Yeah, there's one more gap here, also closed. And so far, so long as the price trade past it, the gap is considered closed, no longer a resistance. All right. Yeah. So CityDev, as an example, yes, there's a confluence of support. Okay, but one thing I'll use this to highlight is be careful of the gap resistance. Okay. Okay, so talking about property, so you may need some construction, right? All right, for the property. So once construction property starts to move, construction project may start to resume. So this is where you can see Chip Eng Seng. Yeah. Okay, so Chip Eng Seng. Okay, so we set it as 53 cents resistance breakout. So when it pulls back, okay, so if you look at it, it's a confluence. In fact, it's three type of support. Okay, one is of course your 53 cents. Okay, so it's broken. Here may become a support. Another thing is the gap. You can see there's a gap up over here. There's a gap up. So the next time it visit again, it could become a potential support. Yeah. So and also your 20 MA coming up. Right, so we continue, it may come up. So if the price pulls back down, so it becomes a confluence, and this time is three types of support levels, right, that the market participants are watching. Okay, so this pullback could take only a couple of days. It could take maybe 2 weeks. Yeah, so you really have got to see what the market is doing. So I'm trying to play out all the different scenarios. Yeah, so for you to be able to do it even on your own, even without Traders Club sessions day. Yeah, any other day, you know what to do. Well, you can do this for all the US stocks as well. All right, but of course we focus on the Singapore market. Okay, another one is CDRH Trust. Okay, CDRH Trust. Right, so there's this level around 99. Yeah, just before $1. Remember? Yeah, so it's around 99 cents. So it couldn't break past until only, again, 2nd of June. beginning of June, right? That's the time where the market turned bullish, super bullish. Yeah. So the breakout. So if you taken the breakout trades, I think we discussed some of this type of trade for breakout. Yeah. So those of you who took the risk, you are rewarded. But as I always say, if there's a breakout and you miss it, then wait for pullback. So what do we mean by pullback? So same thing. 99 cents is a resistance that's broken. You will turn a potential support. Yeah, so CDLH Trust, if anybody asks you what is the next support, horizontally 98.5 cents or 99 cents, thereabout. Yeah, that is the potential support, and it's a confluence. Right? Can you see a 20 and 50 MA coming up? So it become a confluence of support. All right. Okay. Let me repeat this again. If the price if the price does not pull back deep enough back to your horizontal support of 99 cents. Okay, if it doesn't pull back, sometimes the price do not retrace by too much. It retrace only by a little bit. Then you may say, then what do? I may always miss out opportunities like that because the price didn't pull back enough. Yeah, so there's so it'll be good if it pulls back here. So you got a confluence, right? 99 cents and also the 20 and 15 days moving average. Assume it didn't pull back so much. Okay, so still use your 20 and 50 MA as a guide. Price may pull back here without ever coming back to your 99 cents. But use your 20 days and 50 days moving average. By then you'll be going up, catching up to the price break. Use this part here as a gauge. Yeah, use this part here as a gauge. Okay. All right. Okay, let me look at Food Empire. Okay, Food Empire. Right. So Food Empire, the thing is, of course, you have the same signal. You're waiting for the same pullback. So I want to highlight what I highlight for Food Empire is be mindful of this gap over here. Right, today it has it. Yeah, today is the first time it visit the gap, and you can see it sell down, couldn't go past. Right, so the gap is still there. So the gap has been filled up partially. Yeah, so I would say the gap. So originally the gap is this size. Okay. Originally, this is the gap. Okay, now today it is filled partially, so the gap now will become like that. Okay. Okay, just let me highlight a few more. SIA Engineering. Right, SIA Engineering, confluence of support again. All right, so it's around 190, so 190, and there's also a gap support. So you can see it's between 194 and 190, right? So this part here, right, and the gap up. So this whole 190 and 194 becomes a gap support, all right, or 193 thereabout. Oops. All right. So what happens is, wait for the pullback. Today it started to pull back. Yeah. So once it starts to pull back down, the 20 and 50 MA, if it's able to come back up, play catch up, the price come back down, is a potential confluence of support. Okay. Now there's one stock that we have been talking about and waiting. So Sheng Siong. Okay, so Sheng Siong is not about the pullback, it's already pulled back to test the 20 and 50 MA support zone here. All right. So the only thing is that it's at historical high, and if I show you the trading signal, it was over here. Oops. Let me zoom in to get the indicator. All right. So this is the green. All right. So okay, so basically we are waiting for the 481 green, but I think I mentioned it that since it's now in a very tight zone, right? Okay, so you're basically waiting for a price to break. That's your 158. So if you can break 158 and you see 159, 160, sorry, it's 159, you see 160, yeah, so that is the potential upside for Sheng Siong. Okay, but in the event if it doesn't break and it starts to trade lower and lower, so long as it's still within the 20 and 50 MA, right, we look out for the 481 green. So far it's always consecutive 2 rates. Yeah, I'm disregarding here because at this point when there are 481 green, the price hasn't really come down to test the support. Yeah, so it's only when they start testing, you look down, it's only 2 rates. Even now today is second rate. Okay, but if you break out, then this you could take a trade because it's been consolidating for about a month already. Yeah, so if it's able to break out, you see 160, you can take the risk of a breakout trade. But if it doesn't break out, it starts to pull back. So long as it's still within the 20 and 50 MA, watch out for your 4 rate 1 green. All right. Okay, so yeah, so I hope you'll be able to appreciate and understand this strategy called buying on pullback. Right? So every time we say wait for pullback, so where to wait for? So always remember there are 3 types of support. Okay, so always wait for it at either of the support. Okay, so one is your classical support, which is your horizontal support. So previous resistance broken turn support. Right. Second one would be your I'll just go back so you can see. Okay, second one will be your gap support, and third one is your moving average support. All right, moving average support. Okay. All right. So yeah, so I think this is what I'll share today. Thank you for listening. So give this a like and share with your friends, and I'll see you again soon. All right, trade safely. Bye bye.